Great day, Trading Made Easy family. I am certainly glad you found yourself here. Today, let's jump into it. Now, today we're going to be talking about how to make trading easy. Listen, that's what we want. That's what everyone wants. The journey of getting there varies from one person to another. But keep in mind, the goal, the objective is to make it easy. So if trading is not easy for you right now, you're struggling right now trying to make sense of all of this. You're struggling trying to simplify concepts and principles. You're struggling to, make money in trading. You're struggling to keep your emotions intact. You're struggling to prevent yourself from entering into trades when you know you shouldn't, right? You just flat out struggling, then this video is for you. Because what I do here at Trading Made Easy here on YouTube is I teach people simple, easy trading methods that will allow you to consistently get at least 20 to 25 pips. Can you get more? Absolutely. But listen, let's master one thing first. That's my principle. Let's master one thing first. If you cannot or you have not been getting at least 20 to 25 pips on a regular basis, then that's where you need to put your focus. And this is where I teach you how to do that, right? So today, let me just say I try to focus on different trading styles because everybody see things differently. I see the market in a very different way than most traders. You're not going to see a lot of, charts and graphs and channels and all of these things on my chart because that completely blows my mind. Right? I can't think like that. So it doesn't work for me where that may work for others. The goal is to find what works for you. And so what I focus on is teaching various simple, easy methods that you can actually adopt to start trading easy. Right? So today I'm going to be showing you how you can use the Fibonacci. Right? You can use the Fibonacci to trade easy. So that's what we're going to be talking about today. And for those that this resonates with, go ahead on and hit the like, hit the share. Most importantly, hit the subscribe button so that you can be a part of the Trading Made Easy family. And when the exclusive platform Trading Made Easy community launch, you will be amongst the first to get involved, right? To be a part of it. So let's get to it. Now, what you see here is my framework. That's my framework. That's my framework, right? I like to identify where price is playing, and within those parameters, that's where my pips lie, right? So we just right here narrows your viewpoint, narrows your scope, so you're not all over the place. So one of the first things that I totally recommend to help allow you to focus on the things that you should be looking at is to frame price. And what I do to frame price is I go to my weekly and I look at the high and low of the previous week's close candle. That's all I'm looking at. And I place a horizontal line above and below. That's it. Right? So that's where the yellow lines is represented there until price breaks it, until price breaks it. Right? And here we are. Yep. So right here. Now this wick, let me just move this out of the way. This wick happens to extend higher than this wick, so that's why I use the current week's high, because it made a high, right? And if that had not happened, then obviously I would have been using the previous week. And then for the same on my support. So that is how it's framed on the weekly. I go to the daily and I do the same thing. I do the same thing. I look for the previous. Now, obviously, it's a daily candle, so that parameter moves daily, right? That makes sense. So as you can see here, these are my dailies. So now my price totally broke through on Tuesday, totally broke through my daily resistance. So what do? I move my daily resistance line to the high. and which happens to be, we're in this current daily candle, so the high is right here. The high on the daily is actually the same as the high on the weekly, right? So you're going to be making more adjustments each day, because we're working with the daily candle. And then we want to remove our support, right? Where's the low? Where's the low of the previous closed candle? Right here. And this wick extends beyond this wick, so I'll be using the current daily candle's low. It's just that simple. Now, what have I done in doing that is I frame price in where price is going to be moving until it breaks again, and then we readjust, right? And so right now, price is moving within my daily and really my weekly parameters. It's moving within my daily support and my daily and weekly resistance. That's where price is. So I know that this is the area that I am going to be looking for my entries. This is the area where I'll be looking for my pips. It's that simple, right? So now that we have that identified, what we're going to do is go down to the 4-hour, because at this point we're starting to see what price is doing, where price is really, right? This is where you want to start breaking out your fib, because you're preparing to identify a entry. Very important stuff, guys. Hope you're writing it down, rewind, and all that great stuff. This is how we make trading easy. Easy, easy, easy. So now what we want to do is we want to identify where we can potentially get in at this point. On the 4-hour, we're looking to see where price is. What is it doing? Well, the first thing that we're looking at is, well, where did price stop and turn around? So we had this bullish move, right, from this support level, which was what? The weekly support, right? We had that bullish move up. It stopped at the weekly high, and then it turned around, right? Then it turned around. So now we're in a correction. Now, the reason this is a correction is because the overall direction or the overall trend is bullish. So forgive me for not pointing that out. That is the first thing that you want to identify, right? Where is price ultimately going? Okay. And it is bullish. So we are in a correction because we basically rejected off of this weekly high and daily high, right? So currently we are in a correction. Now we want to go where price is going, right? One or two things. You can go where price is going, meaning you can buy and sell, or you can trade, and meaning you're only trading the trend. Either way you do it, you have to identify the entry. That's pivotal. So we've done that. We're in a correction. Now price has moved down from this corrective move, and it hit our daily low. That's a support level, right? And inside of the support level, we can potentially see bulls come in the market because we hit that level. Now we are consolidating, but it did break. Now this is a 4-hour candle, so there's still a lot of volume inside of that on the lower time frame. So where it looks like you may not have been able to capitalize on a really good buy on the lower time frame, you certainly would have been able to do so, because it breaks the data down. It breaks the volume down inside each candle. Okay. But just know on the 4-hour, we are in a consolidation, and we hit our daily low, and we have not broken that. That's the key, guys. Break and retest, because a break and retest is a strong communication. Remember, Forex is a language. And when we learn how to understand and communicate in that language, we put ourselves in a much better position to profit consistently. Okay. So at this point, we have not broken the low. We have not broken the high. So this is our playground. Now what you want to do, let's break out the fib on the 4-hour. Let's break that out. Now I'm going to take it from this low, swing low, to this swing high and move it over, right? Now where's price in relation to the fib? Right? So what price in relation to the fib, the first thing is we know that price is on the low of the trend line. right? So we're in bearish communication or territory happening right now, but that's still not enough. We still need a break. And where's price in relation to the key levels? So price right here, we have a key level, which I'm going to identify right here. That's the 38. Price has not extended beyond the 38. So I'm going to put a line there because now what that tells me is once price breaks that 38, closes below that 38, right? Retest the low of that 38, that's bearish communication. That's telling us that price is telling us that it is building up bearish volume. So we may see price continue to go down. What else are we noticing with the fib and price? Well, let's look at this golden zone, which is our 50, our halfway point, right? So, and it happens to be what? It happens to be the support level on our framework that we just identified. The key is to do all of this with price and then bring in your tools to confirm what you've already identified. And when it matches up, you just made 100% on the test, right? So this is what we're looking at here. We know this is also the 50 pivotal area on the fib, whereby if price breaks it and closes below, we have a strong probability of price pushing down. So right now we know what was that? Let me put my line back. I got rid of my line right here at the 38. That's our first break that we're looking for, right? That's our first break that we're looking for. And then obviously we have this break here, which happens to be the 50. So right there, just in what we've just done, we have two key areas. And because the 38 and the 50 is so close, let's just matter of fact, let's make it easy. Let's take that 38 off, right? We're really close to the 50. Price breaks and close below the 50. We have a strong probability of a bearish move down, right? Which becomes now a potential entry for you. Just in those simple steps, we have identified a strong potential entry area just in those steps for a sale. Now, what needs to happen if we're buying? We're basically doing the same thing, using the fib, right? So if you want to use the fib to help trade easy, certainly this is one of the ways that you can do it. So, okay, yeah. So price is above our trend line. Price is above, I thought it was below our trend line before, but that's the 38. So no, it wasn't. If I said it was, I do apologize. I'll be talking fast. And my words come out faster than my brain or vice versa, but you get the drift. You get the drift. So nevertheless, what we're looking at is prices above this trend line. So a break of the trend line, a break of the 50, right? For the low is what we're looking for. Now, if you were looking to buy, we need a break there too. It's just in the opposite direction. And so where price is currently, we are above the 38. So we would need break of the 23. If price comes back up, break above this 23 and retest the high of it, then the communication is that price wants to continue to go up to this area of resistance. And the fact that we have not retested this area, right? So it will be communicating to me that we're heading to retest this area. So those are the possibilities. Those are the potential setups. So you don't want to rush price. Wait for price to show its hand. Wait for price to make a move. We just have to understand what the move is, right? So hopefully this is clarifying some things for you to make trading easy. We're going to make trading easy, and it just depends on how you see the market. That's why I give you various ways of looking at the market, and whichever way resonates with you with ease, then that's your deal. And when you find that deal, stick with it. Stick with it. Don't try to do all these other things. Stick with what works for you, right? So on the 1 hour, again, we can really do the same thing on the 1 hour, right? That we just did on the 4 hour. So I'm going to take my fib and this is a swing high and that's a swing low, right? So where's price in relation to that? Remember, as we go down, we'd see more data. As we go down, we see more data. So on the 4 hour, we can see that price is still in bullish territory. And then when we drop down to the 1 hour, we can see that price is in the bearish territory, right? Because it's the data within each candle's time frame that we're breaking down. And that's what you're seeing. Okay. So on the 1 hour, we're seeing that price is in bearish territory, right? Because it's a reflection of a couple of bearish candles on the 4 hour, just broken out. Okay. And it's been very important to understand that. Now, so now once we put our fib on there, now we're looking to see, well, where's price in relation to the key levels? Right. So price is telling me on the hour that we still have some bearish, communication and tendencies going on, and we are below the trend line. So if we're looking to sell, right, we can look at this 38, right, where the price reacted off of this 38. We wicked up and we selling down now. Right, we're selling down now. So this becomes an area where we can sell with price pull back. Right? Or you can simply even take 50% of the closed candle. So once this candle closes, you can take 50% of that, but we're not finished, because we're going to drop down to our entry time frame after we finish with this. And this is where you want to, position yourself. And so for a break, we're looking for a bull, we're looking for price to break above the trend line, right? Close. So that would be the 38. So if price breaks this 38, closes above it, retests the high, then we're looking at price potentially moving up to the next key level. So you can break it out by key levels to make trading easy and to identify a good entry point. You can simply say, well, you know what? I want to sell from the 50, because that's a golden zone and price typically rejects off of the 50. Even if it pushes past it and keep going, there's typically a rejection that takes place before that happens. So you can say, hey, I'll do that there. Or once price gets to the 50, I want to see what price does. If it closes above or below, then I'll position myself. So there's different things that you can do to make trading easy using the fib and the key levels on the fib, right? So bearish territory, right? We're looking for some sales. So let's now drop down to the 15-minute 4-hour entry. 4-hour entry. Let me go back to the hour, because I like to assess as I go. So on the hour, we reached the weekly high, and we rejected off of there. And this is, of course, the result. So we are in a correction. We're in a correction, and we come close to our daily support, which is why you see price pushing back up. We have not come back to retest the area, so it's possible that price may do that. But price needs to break a certain level before we position ourselves for the trade. Now we drop down to the 15-minute. So now the question is, if we're going to buy or if we're going to sell, where do we do that? Right? Where do we do that? Okay. And so on the 15-minute, again, we're using the fib. That's the nature of this particular video. Subscribe so that you can get other videos and other easy trading methods to see whichever one works for you. So obviously price kept rejecting off our trend line until until it broke. It broke the trend line, came back to test the high of the trend line, right? So we're looking at bullish communication going on here, right? Price is currently at an area of support. For a buy. So if you wanted to buy, this would be the area that you may want to look at buying from, right? And you can buy it back up and to each level. It's up to you to each level. And so now you see how we started off, we started off at a support level. That's what we started off at. So when we drop down in between the high and for the 1 hour, we've been buy sell according to the fib, right? We were in bullish territory, and then we were in bearish territory. And as we drop, now we're in bullish territory, right? We're at an area of support. So that's bullish. That's a bullish territory. We're on the other side of the trend line. We are at a support level, and we can look at a potential buy from this point. right? Now, once you do that, you want to certainly add in your additional confirmations to confirm that move. So at this point is when I would break out my moving average. I'll put the 13 and the 62 on there, right? And now I want to see what price is doing in relation to that, because I need price to be above those moving averages. One of those moving averages. And in this case, it is not. So would I take the position? No, I won't. Now, this is where a lot of people completely fumble the ball, because they have a couple of confluences and they're starting to feel like, yep, it's going to do it, but they don't follow their trading plan. And if your trading plan calls for you to throw those moving averages on there, and it has to, price needs to respond within those moving averages, and it does not, and you take the trade anyway, this is how you get in a pickle. This is how you potentially lose your trades. Now you've just entered into a less quality position. The quality positions require you to wait. There's no ifs, ands, or buts about it. So right now we're looking for a buy, but are we ready to buy? No, we are not. We need price to be above our moving average. That's what we need. We need price to be above that moving average right here. This 62, I need price to break it. I need price to break it. And if price doesn't break it for the buy, I won't take the buy. Now, if for a sell, then I'll be looking at this area here, the 38, as an area for potential sell, and obviously the 50, because we know that's a stronger key area where price will more likely reject from, as you saw in the past, right? 50 came up and it dropped. 50 came up and it dropped. That's the golden zone. So we can expect that. So this can be your area for a sale, right? And for a buy above that trend line for a buy. And that's it, my friends. So hopefully this has shown you some simple, easy ways that you can use the fib to trade easy and keep a clear chart as much as possible, if that works for you. So I'll see you on the next video. Don't forget to hit the subscribe, like, comment. I do read those, and we'll rock and roll. Y'all have a great one. Bye-bye.